Hello and welcome to Chapter 4 in this Money or Cash in Transit Insurance webinar series. Today, we will look at money insurance policy additional coverage, commonly referred to as extensions. Additional coverage under a money insurance policy refers to extensions or endorsements that can be added to the standard policy to provide extra protection for specific risks or situations. These additional coverages enhance the policy scope and tailor it to the insured's unique needs. Here are some common additional coverages that can be included under a money insurance policy. 1. Hold-up coverage. Provides coverage for losses resulting from hold-ups or attempted hold-ups during cash transportation or while at the insured's premises. 2. Fidelity guarantee coverage. Extends coverage to include losses caused by dishonest or fraudulent acts committed by the insured's employees or third parties. 3. Employees' effects. This coverage extends to provide compensation for the loss, damage, or theft of employees' personal property, such as clothing, accessories, and other personal items stolen together with the company's money during a robbery incident, especially when handling or transporting money, valuables, or cash in transit. 4. Employees' personal accident cover. This is additional coverage that provides financial protection in the event of accidental bodily injury or death suffered by a company employee during a robbery of cash being transported by the said employees or in incidences where robbers attack and injure employees at the workplace or at their home while stealing the cash. This extension will only apply when there is an admissible cash-in-transit claim. 5. Depositor's forgery and alteration coverage. Covers losses due to the forgery or alteration of checks or other negotiable instruments drawn on the insured's account. 6. Cash and automatic teller machines, ATMs. Extends coverage to include cash stored in ATMs against theft, burglary, damage, or other covered perils. 7. Money in electronic or digital format. Covers electronic money, digital mobile phone top-up cards, electronic gift vouchers, digital currency, or cryptocurrency against theft, cyber attacks, and other digital risks. 8. Loss of interest or earnings. Covers the loss of interest or earnings that the insured may incur due to a covered loss of money. 9. Contingent liability coverage. Provides coverage for the insured's legal liability arising from the loss of money belonging to a third party while in the insured's custody. 10. Cash courier liability. Covers the insured's liability as a cash courier responsible for transporting cash on behalf of others. 11. Counterfeit currency coverage. Protects against losses due to counterfeit currency that the insured accepts in good faith. 12. Kidnap and ransom extension. Provides coverage for ransom payments and related expenses in case of kidnapping or extortion incidents during cash transportation. 13. Property damage coverage. Covers physical damage to property, such as vehicles, used in cash transportation or other covered activities. 14. Loss of key coverage. Covers losses resulting from the theft or loss of keys used for access to cash storage facilities. 15. Professional indemnity coverage. Protects against claims arising from errors or omissions in cash transportation or handling services. These additional coverages can be tailored to suit the specific risk exposures and operations of the insured. When considering additional coverage under a money insurance policy, it's essential to work closely with the insurance provider to assess the specific needs, understand the terms and conditions, and ensure that the policy adequately addresses the identified risks. Before we close, let us briefly look at key components of money or cash-in-transit insurance policy. Money insurance is a type of policy designed to provide coverage for the loss of money due to various perils, including theft, burglary, robbery, damage, and other specified events. The key components of a money insurance policy include 1. Insured items. Specifies the types of assets covered under the policy, including cash, banknotes, coins, checks, and other negotiable instruments. 2. Coverage limits. Defines the maximum amount the insurer will pay in the event of a covered loss. This limit can vary based on different categories, such as cash in transit, cash on premises, etc. 3. Premium. The cost of the insurance policy is influenced by factors such as coverage limits, deductibles, security measures, and the insured's risk profile. Several factors can affect the terms, coverage, and cost of a money or cash in transit insurance policy. Insurance providers take these factors into consideration when underwriting a policy and determining the premium. Some key factors that can influence a money insurance policy include the nature of business and activities, value of cash handled, security measures, geographical scope, history of losses, employee training, type of vehicles used, security protocols, coverage options, deductibles, duration and frequency, employee background, and business reputation. It's important to work closely with the insurance provider to accurately assess these factors and determine the appropriate coverage for your specific cash handling and transportation needs. By providing detailed information and understanding the insurer's requirements, you can ensure that your money or cash in transit insurance policy adequately addresses your risk exposures while providing comprehensive protection. 4. Deductibles. Defines the portion of the loss that the insured must bear before insurance coverage comes into effect. Deductibles can vary based on the type of claim. Deductibles in a money or cash in transit insurance policy represent the portion of a claim that the insured must bear before the insurance coverage comes into effect. The determination of deductibles is influenced by various factors that help balance the insured's risk exposure and the insurance premium. Some key factors that may influence the determination of deductibles in a money policy include risk tolerance, coverage type, coverage limits, value of cash insured, type of business activities, security measures, loss history, frequency of activities, type of vehicles used, employee training and background, industry standards, regulatory requirements, premium considerations, and risk assessment. Ultimately, the determination of deductibles is a collaborative process between the insured and the insurer. It's important to carefully consider the potential financial impact of different deductible options and work with the insurance provider to choose deductibles that align with the insured's risk management strategy and budget while providing adequate protection against potential losses. Each of these components contributes to defining the terms and conditions of the money insurance policy. It's crucial for businesses and individuals to carefully review and understand these components to ensure that their coverage aligns with their specific needs and risk profile. End of Chapter 4. Up next, benefits of having money insurance policy. See you shortly.